Hello, dear students. In this session, let us understand about the introduction part of financial management. So, before getting into financial management, we need to understand what is finance. So, finance is the basic backbone of the business to run the organization. So, though we have, land, building, machineries, whatever, without finance, running the business is impossible. So, starting from the base, purchasing of land, purchasing of machineries, labor cost, electricity, water resources, for all these things, even for working capital. So, the basic thing, first and foremost thing is we need finance. So, without finance, running the business is not at all possible. So, financial management is something that, so how an organization is effectively managing the finance. So, without facing any distractions, so without facing any losses, how company is balancing the situation in an effective way. So, that is the study all about financial management. So, the definition is given here as so, yes, of course, management concepts related to budgeting, forecasting, managing, controlling of what? Of financial resources. Yes, so we have finance with us, we have cash with us. We need to know how to budget it, how to forecast, how to manage, and how to control. So, it aims to maximize investors' profit by optimizing the firm's money usage. Yes. So, our at most aim is what? To increase the profit. That is what the aim of every business owners. So next is, so it is also concerned with the areas like profitability, expenses, cash, credit. So for all these words, finance is closely related. Next. So financial management. As I said before, budgeting, managing, forecasting, supervising. So we need to know how to budget it. Say, for example, for running the organization. So we should plan for a budget that, yes, so I need around 50 lakhs. I need around 1 crore. So that is what the budget for the infrastructure, for the machineries, or whatever the changes that we need to do inside the company. First thing is we need to know how to budget it. And next is what? Managing. So we should know how to balance the situations, like so basically cash inflows will be there, similarly cash outflows will be there. So what are all the cash which is getting inside the company, that is cash inflows, and cash outflows is something that all the expenses, right, that we know cash is going out from the company. So that is also to be managed. And next is what? Forecasting. So financial management is something that not only focusing on the present, we need to forecast for the future. That is, after 2 years, what will happen? After 3 years, what will happen? For that, we need to plan in present, that is for today. Okay. And next is what? Supervising. Supervising is something that, so we should have some control towards our cash, towards our finance. So that is what? Cost controlling, cost controlling. So that is what? Supervision. Okay. So this is all about financial management altogether. So why we are doing budgeting, why we are doing managing, forecasting, supervising, ultimate aim is to increase the profit, to maximize the profit. That is what the major thing. And next, so definitions given by different authors like Weston and Braham, and where he said that these two authors said that like, financial management is to province of is province of financial decision making, harmonizing individual motives and enterprise goals. So individual motives here, individual refers to the business owners. So where what will be their motive? Obviously to reach the growth, to reach the success stage. So in case if they are having one branch, so they have to increase, their number of branches should be increased. They should give some more changes in the company, no more growth in the company. That is what individual motives, it is what becoming into enterprise goals. Okay. And next is in words of Solomon, he said that financial management aims to effectively use the capital funds, which also happens to be a significant economic resource. Yes. So capital funds. So fund which you are, utilizing for purchasing land, building, machineries. Okay. All these funds are called as capital funds, long-term funds. Okay. So that which also happens to be a significant. Why we are doing all these things? In future, we have to bring some change in the economic resource, economic growth. Okay. So these are all the different definitions. And yes, one more definition is given here by Gutman and de Gaulle. It is the activity concerned with planning, yes, raising, controlling, administering, and the procurement of funds. Procurement here, it refers to the, collection, collecting, gathering. Okay. So simply you're having cash with you and you do not know what to do with the cash and you need to do the business. That is not at all possible. So even though if you're having cash, you should know that how to plan it, how to raise, that is increase, control, and then manage, and then procuring funds. So all these things, all these tactics that you have to know for running the company. Yes. Coming to the principles. Yes. First one is organize your finances. So you should keep it separate. Okay. For land, I need this much fund. And next is what? For this machineries, for this water bill, and this for purchasing of raw materials. And this is for wages. This is for salaries. Like this, you should organize your finances. And next is spend less than you earn. Always our expenses should be less. Our income should be higher. Next, put your money to work. So entire money, why? What is the reason for we are doing all these things? For the better productivity. That is what the thing. And next is limit debt to income producing assets. So income producing assets, which means here they are mentioning that don't focus on procuring more debts. Okay, so that is what debt should be less. That is what limit debt to income producing assets. So you should know how to balance those situations. And next is continuously educate yourself. So in the field of finance, so where continuous education, that is what very, very important. For the first year, you are getting less profit. For the next year, for sure, you should increase your profit. So, and that how it comes? By means of learning by yourself. Next is understanding the risk. You should know. So basically, two major things are there in finance. One is risk, another one is return. Okay. If you are taking risk, obviously you'll be getting the return, but that risk, whether that is an appropriate risk or not, right? Whether the level of taking that risk, whether it benefits for you in future or not, you should analyze that. And next is diversification is not just for investments. So, different portfolios are there in finance, right? You'll be having funds with yourself, or else you'll be purchasing from the, borrowing funds from the outsiders. It depends upon the situation. Whatever, all these things for running the business, for expanding the business, for aiming for the next level, that is growth of the business. And last is maximize your employment benefits. So if your company is growing well and good, obviously you are providing some employment opportunities for the general public. Okay. So examples of financial management, yes, managing cost and expenses. So that is what one example. And next is hiring new employees in the business. If you are increasing your profit, right? So if you achieved your goals, obviously there is a chance for hiring new employees, new people inside your company, and then purchasing raw materials, that also happens, and then estimating the budget for the upcoming year, how much budget is needed. So all these things are the different examples of financial management. So hope you all understand. Thank you.